And Megan, is a little bit of a callback to yesterday's conversation with Harley Davidson and maybe its struggles to reach some of the younger crowds. It sounds like Coca-Cola is at least aware that they got to expand their products, diversify their revenue streams, and try new things. That's really what the signs of these big, successful, long-standing companies that they typically have is this ability to innovate, be agile, and continue to adapt to trends. Does the data support that, though?
Pandemic. And as you guys have already touched on, they were hit harder than the Pepsi because they don't have this snack portion, these people stuck at home, eating Cheetos. That's not part of their portfolio. But in a way, it almost positions them well whenever you're looking at things from a reopening mindset. I think from a sales perspective, prior to the pandemic, about half of their sales came from things like bars and restaurants and events and things of this nature that all of a sudden were taken off the table, not by any decision of Coke, but just in the macro environment that they're positioned in. And so what we see when we look at this and we listen to mentions of people who are actually talking about buying a Coke product, buying a Powerade, buying, Simply orange juice. These are some of the brands under their umbrella. We see continued decline in the quarter that they're about to report. So that green line right there, those are those purchase intent mentions of people buying one of the many Coke products. I think we have more than 100 brands that we're tracking within Coke. And what you can see at the very end, though, is that we're starting to get traction. We're starting to tick up on a quarter-over-quarter basis. We're starting to see that demand, a little bit of a turnaround. So from our perspective, when we look at Coke, we say, this quarter that they're about to report is going to be a really tough quarter. We saw this, continued lockdown, continued, decline in demand, but things are looking more positive, especially in the last month. And those are ticking up, even jumped up a few points since I passed that chart along. So I think that this is something to keep an eye on. And this is something that, investors may have reason to be optimistic for long term, especially as these events resume.
Megan, if you're running Coke and you put out your earnings on Monday that we all agree aren't going to be great, right? Yeah. They're going to struggle. But this old school, corporation is going to be able to trim things like supply chain, marketing, production, packaging, all the expenses that go into this. And they'll probably put up a nice beat on earnings expectations. Now, it won't be a great number, but it'll be better than expected because they'll go to the other side of the ledger and cut expenses. Now, that being said, I fully expect their CEO to get up and say, consumer demand trends, all getting better. Guidance should all be better. The second half of the year will be much better than the first half of the year as the United States reopenings and all those things that you guys mentioned that people haven't been going to. Restaurants, sporting events, concerts, any social gathering. Those are all going to get better. And that should be enough to keep this stock in this range or slightly even higher. But correct me if I'm wrong, Megan, it's going to be their guidance because it's not going to be the number that's going to improve. It can't be, right?
Yeah, that's exactly what we're looking at is this guidance moving forward. And I think that that's partially what's contributed to this earnings score, because even though we saw, a year-over-year decline, especially in the quarter that, ended a couple weeks ago, we're starting to see this shift. We're starting to see this turnaround in a lot of its key brands. When we look at Dasani, we see double-digit quarter-over-quarter growth in Dasani. We see double-digit quarter-over-quarter growth in Powerade. Things like this are an indication that things are starting to normalize. And so I think that this is something, as we watch moving forward, to key in on these brands and say, okay, is this continuing to gain steam? But certainly right now there is some reason to be optimistic for a company like Coke. And as you mentioned, they do have very strategic management decisions to kind of minimize the impact of these event-related closures in the past quarter.
And more than likely, a lot of that event-driven kind of deterioration in revenue and sales is probably not showing up in this kind of consumer-facing social media data where maybe someone's talking about going to the store, picking up a Sprite or whatever it may be. Are you impressed with the resiliency over the past few years of this brand? Does it really, to me, this looks exactly how you would assume a consumer staple would look. And when you look at kind of the basically flat line, I mean, this is kind of the idea behind an investment in this kind of company, right, Megan?
Yeah, that's exactly right. I think that Coke has done a really good job navigating this. And this is one of those things where on this chart right here, you're looking at this, it's a scatter plot, and it charts sentiment, and it also charts just year over year mention growth. And you can see that Coke is starting to get closer to that center line. You know, things are normalizing. We included Monster just to give a frame of reference to show that, you know, obviously much smaller volume, but there are outperformers in this beverage space as well. But at least for someone with the volume of Coke to start to show signs of getting back to normal, that could be a positive takeaway for investors if they give hints to positive guidance to things in these brands that I've previously mentioned, things starting to return to normal.